Hello everyone, welcome again to my YouTube channel. So this is Dharam and today I would be showing you a profitable trade which I have made recently. The return that I have made is 10% in 3 days. The capital that I have used in the trade was very minimum, that is 3500 rupees only. Though the capital was not that huge, but the trade was quite a success. The strategy that I have used in this trade was purely based upon candlestick patterns. So in this video I would not only be telling you about the candlestick but also the real reason behind those candlesticks, right? So if you have any doubt, please comment down upon the comment section. So guys, this is the stock where I have took a trade. The name of the stock is Kothari Petrochemical, and if you could see the screenshot, I have bought at an average of 102.99 and I had taken a quantity of 34. So I have sold at an average of 111.7, which gave me a profit of almost 300 rupees in 3 days, right? So guys, if you could see the big huge candle, which is a bullish engulfing candle, I have taken a trade on the top of this candle where it confirmed a bullish engulfing candle, right? The date was 27th of January and I held the stock for 3 days. On 26th there was a holiday, and let me remove this drawing. So on the 27th day I still hold the stock since there was good momentum and there was good bullish candle. So on the third day the candle made a high of 114 rupees and I have sold it at 111 somewhere here, right at the top. Now let me explain you the reason behind my entering in the stock. This big green candle, it is known as a bullish engulfing candle, right? Basically bullish engulfing candle are the candle which shows or which signals any trader about a trend change. It is a reversal candle, right? If you could see before, there was a big good rally and a pullback. From here the next day a bullish engulfing candle was formed, which gave a signal that the trend is again in the favor of bulls, right? The trend have changed now. Let me remove all the drawings. Okay. In order to be this engulfing candle to be true or to be confirmed, you need to see that if there was a downward trend before forming up of this green candle, right? You need to see that if there was a bearish candle in the market, right? If you closely see that there was 1 2 3 and finally 4 red candles, which shows that the trend was a bearish one, right? Now let me remove all these drawings. So now what is your next step? That whenever in this downward trend, you need to see that if there is a green candle forming the next day, right? So there was a green candle whose opening was here. Wait, whose opening was here, right? And the closing was here. So if you closely see that the opening and the closing of the candle is higher than the previous day's opening and closing, right? Which shows that the green candle have completely engulfed previous day's red candle, which signifies that the green candle is the bullish engulfing candle, right? So on 24th Jan there was a big bearish candle, and after that there was a gap down opening and the price went till 83 rupees, and then from there it reversed back, right, and formed a green candle. So what I was doing, that I was waiting for the confirmation of this bullish engulfing candle. I was waiting that I will only take place in this trade when the price is above the previous day's opening of the red candle, right? So around 3 o'clock I entered at 101 price and I have exited the stock at 111, right? Guys, now let me explain you the psychology behind this bullish engulfing candle, right? If you could see before, this pullback, there was a very good healthy bullish momentum in the market, right? By seeing these two bullish candles, there might be some greedy investors, greedy traders who might be entering at the highs of the trend, right? They might be entering here, might be here, or at the top, right? So now what happens is that on the next day the price opens neutral and immediately the price falls, right? Now what happens is, let me remove this drawing. Now what happens is that the people who have entered at the top gets nervous. Now by seeing the red in their portfolio, they get nervous, and some of the investor and trader might square off their position here itself, right? What happens next day? The candle gaps down and opens even way below, right? This confirms that there was a panic in the market and people are selling their positions, which makes the second day also a red candle, right? So by seeing this red candle, the people who has not closed their position here, here, so what happen is that they get panic and they start selling heavily. There is a selling pressure in the market which makes a gap down opening, and due to the heavy selling pressure there was a very big red candle formed the next day, right? When you see the candle, when you compare the candle, this candle with the other two candle, you can see that this the third day candle is way bigger than the other two candle. Why? Because there was a heavy selling in the market. Due to the heavy selling in the market, what happens is that on the next day the price even gaps down. There was a gap down opening, right? And the price moves down at this wick. This is the residual buying, residual selling. I'm sorry guys, this is the residual selling. The people who might have not sold their positions here, they might have sold their position here, here, right? Which makes this residual selling, which forms this wick. Okay, now what happens is that by seeing this, by seeing the previous day's huge bearish candle and even and after that gap down opening, which makes the smart money, the smart people in the market active. Now they see this fear as an opportunity, right? They see the fear in the market and they grab it as an opportunity, right? They start buying the stock, and the stock closes above the opening of previous day's candle, which makes a bullish engulfing candle, right? Which confirms that now the trend have changed and bulls are in control, right?